Good morning, everyone. This should be a fascinating half an hour because there are a couple of subjects. Well, I'm going to start out with something going viral on social media because I don't usually have stuff going viral. And this will feed into what we're talking about. So I did this video about weddings and eloping and the cost of marriage ceremonies.
Okay.
And as you can see, I got 177,000 views on, just... So anyway, clearly...
Congrats. Yeah, clearly it's important information.
It hit a nerve. It hit a nerve, okay? And so, in any case, my name is Andy Norton. I'm with Samson Properties in Tysons, and our guest this morning is Carolyn Flitcroft with Main Street Home Loans, contact information there. And since you'll be seeing this on YouTube, her contact information will be in the comments below. And as we're getting started, since this will be such a fascinating video, be sure to hit the like button and subscribe so that when we have additional content that you want to see, you'll be able to see it. Now, for starters, some of you watching may have done a loan with Carolyn or know her by her reputation as a mortgage rock star. Okay. Yes. But for those who don't, if you can tell us a little bit about yourself and your company, and then what are you seeing on the street? What's your assessment of the market?
Sure. I'd be happy to. So I've been in the business for 22 years, and I started off as an assistant and then went out on my own in 2008. As far as 2023, this has been my worst year so far, but still okay. It's just been a really, tight market. For buyers, there's still low inventory, and interest rates are increasing, which I think is actually good because if they were lower, it would be even more competitive. So it is helping to cool the market off a little bit, but it's still really competitive in the Northern Virginia, DC area. And there are no refinances really. So it's just there's just not a lot of business.
Your assessment looking forward. Some people say, oh, this is a cycle, rates will come back down, and this doesn't feel like a cycle to me. This feels like a paradigm shift. Do you think this is a cycle?
I mean, I think it can be part of a cycle, but I don't think that we're going to go back down into the threes unless we have another major world issue, another pandemic or something like that. As long as a huge world war or something could maybe cause the rates to go way down again. But I mean, I think they'll go a bit lower at some point, but I don't expect them to go extremely low like they were.
Would you be shocked to see in the 8s or 9s?
I wouldn't be shocked.
Okay.
I don't want that, but I wouldn't be shocked.
Okay.
Yeah.
Nor I.
Yeah.
So we're on the same page there.
Yeah.
Okay. We'll argue later, folks, but okay. So one of the things that you wanted to speak about, because I asked if there was a subject near and dear to your heart.
Yes.
And you were talking about assumable loans.
Yes.
And many of the people watching, we really haven't been in a market where we cared about assumptions for 12 or 13 years. So they're really kind of, if you agree with this, two different ways of looking at assumptions. One is from the buyer point of view, trying to buy a property that has a 3% assumable loan on it. And the other is, what if you're a seller of a property and you've got a 3% assumable loan?
Right.
So do you want to start with the buyer side?
Sure, I'll start with the buyer side because that's normally how I get involved in the situation. Is a buyer comes to me and says, "Oh, I found this property, and it has a 3% rate." And basically, either if it's an FHA, Federal Housing Association or Administration, or VA, Veterans Affairs, those are government loans, and they are assumable, and that's part of the note. It's part of how it is. It can be assumed. But as a buyer, you need to know that that doesn't mean that the loan is able to be assumed. So what needs to happen is your realtor needs to contact the listing agent to get the scoop. They need to find out if it's VA or FHA. If you don't have any kind of veteran eligibility, you likely won't be able to purchase the property. It's just in our area, there's so many veterans, it's easier to find. You can find another veteran, and what happens is you have entitlement, and if you have another eligible veteran, they can swap entitlements, and then it's done. If a veteran sells to a non-veteran, that ties up their entitlement. So that kind of puts them in, then they can't use their VA again. And then what happens if that person sells to somebody else? And then who knows what would happen. So, I mean, unless it's a dire circumstance, people aren't going to want to sell their home with a VA loan to a non-veteran. So, in any event, the first thing that needs to happen is they need to talk to their agent to find out the scoop. If it's, let's say that everyone's a veteran, it's all going to work out. The seller needs to find out from whoever is servicing their loan, like whoever they're making their payments to, even has an assumption department. Just because a loan is assumable doesn't mean that it can be. If it's a smaller bank, they may not have an assumption department. They haven't been needed for a long time. So if it's not, then the loan can't be assumed. Then you need to get a copy of the mortgage statement, because you literally take over that payment. So you need to know how much is owed, what the payment is. So you go through that, and the seller needs to find out if the loan can be assumed. They do have an assumption department. What's the turn time? It could be many months. Sometimes the assumption department is one person. So
unfortunately,
right. So
I've run into that lately.
So if the seller is looking for a quick close, it's not going to happen.
Yeah.
So then you also have to keep in mind, you'll see from the mortgage statement how much is owed versus what the list price is, and there's often a huge gap. So you can't add on to that mortgage, you're just taking it over. So you'd either have to come up with potentially hundreds of thousands of dollars of cash.
Right.
I do have a source in the DC area that will do, I think, up to $250,000 gap, like an assumption gap loan. It's just a second mortgage. So, but those are hard to find. I spoke with somebody at the VA, and he basically said, "Yeah, good luck finding a bank that would do it."
Yeah.
They don't. The VA doesn't care if there's a second mortgage, but it's up to the buyer to find a place for that. And they do charge a 0.5% of the loan amount as a fee that has to be paid in cash.
Yeah. Although if you're taking over a 3% or a 3.5% loan, who cares about the half point?
No, it doesn't matter.
Right.
Yeah.
And as a technicality, not that anybody else would ever run into this, I know of one coming on the market in Burke.
Okay.
With, I believe it's a $350,000 assumable balance. I want to say 2.9 or 3%.
Okay.
And the veteran, half of this couple, is deceased.
Okay.
And so that there is no reinstatement or substitution of eligibility needed, and whoever buys that property, they'll need a lot of cash, but they won't have to be a veteran.
Oh, that's great. Yeah.
Yeah.
That's great.
Now, FHA loans, that's not an issue, though.
That is not an issue. You could still have the same issue of there being a gap, but
sure.
Anyone can take over an FHA loan. So.
Okay. Have you actually run into title companies where some are better than others in knowing what to do?
No, I have because I don't really get involved with the assumption part, because
okay.
it's whoever is actually servicing that loan. The buyer has to work with them you still have to go through a pre-approval process. There's probably some additional closing costs with the bank, but nothing big. And they just get approved through the assumption department.
I can tell you anecdotally that there are some title companies in the area that are more knowledgeable and better equipped
I have no doubt. Yeah.
to handle this, to handle an assumption. Okay, so that's what would you advise a seller that's sitting on one of these assumable loans?
It's just to do their homework and contact their servicer to find out, do they have an assumption department? Can an assumption be done? And what's the turn time? And see if they could find out maybe if there are any particular lender costs. And that's really it. And if that all is a go, just have a mortgage statement ready to provide to any prospective buyer, so they know what they're dealing with.
Right. So another thing that I ran into recently. So if you get a new conventional loan, the amount that you borrow is the amount that you borrow.
Yeah.
But if you're taking over somebody else's mortgage on an assumption, that mortgage balance is going to be going down month by month by month.
Yep.
so that if it's going to take the bank 3 months to process this, the amount that's actually assumed by the buyer when it finally closes is going to be
lower. Yeah, I mean, it's a really good deal. If you can get an assumed loan, do it. Because you're also starting out with your amortization, how your loan is paid down.
Exactly.
You start off, the first month you're paying the most interest and the least principal, but every month that ratio gets a little bit better. So if you're 5-6 years into the loan, then you're starting off paying more principal from the get-go.
So I have a hint, but I'll let you go first. Do you have any hints on how a buyer can find such properties?
I think they need to get a good realtor.
Yeah. Do you know of one, perhaps, sitting to your immediate left?
I think Andy would be great. Yeah, I would definitely reach out to Andy. Yeah. You're able to search for that, right?
Yes.
Yeah.
And so that in our multiple listing, we can actually set up a saved search where an assumption is one of the criteria.
Oh, really? I didn't know that. Okay.
And that as soon as one of those properties is entered into the MLS, in like a second or so, it can ping the realtor's phone that there's a new listing with an assumption.
Oh, that's great.
And so if anyone out there thinks, I think I'd like to try to find one of these.
Yeah, call Andy. Yeah.
Yes.
I didn't know that was even a search characteristic. So
Yeah.
That's cool.
So, and I can put you on an email blast list. Okay. Now, so that's plan A. If you can take over somebody's mortgage at a low interest percent, you agree. Do it.
Do it.
Okay.
Yeah.
Okay. Now let's sort of morph into they can't.
Okay.
Okay. And so, and kind of getting back, we were talking earlier about my viral video.
Yeah.
And I had done this video a couple of weeks ago, and it had to do with weddings and the cost of weddings. Mm-hmm. And there was a study that came out that other than California, which will not surprise you that it's actually exponentially above the rest of the country.
Shocker, yeah.
That's right. But the 49 other states other than California, the average wedding cost was like $45,000.
Yeah, that's obscene.
Yes. And so I just did this almost like a laugher of a 60-second video saying, hey, don't have this big expensive, ceremony. Instead, elope. Use the money for a down payment, and when you're happy in the house, invite me to a party on the patio.
Yeah.
And I never expected that close to 170,000 people would find this controversial. I don't know. So we spoke earlier about what I'll call generational real estate.
Yes.
And there are many people, as you know, who are renting.
Yes.
And they would like to buy. But with interest rates at these rates, they can't afford to. And you mentioned no inventory of homes for sale.
Right.
And so prices keep going up. So a strategy, it occurred to me and to you, a strategy is needed to get young people into homes so that they don't spend their whole lives renting.
Yeah, for sure. And I have seen clients do it. The most typical way is if either parents and or grandparents gift them money, and we can talk all about the gift tax and all of that. Like it's for most people not even anything they need to worry about. I think the current exclusion is 12.9 million. So if you're giving away 12.9 million, I don't think people need to be worrying about this. Yeah. Those aren't our people.
Yeah. If they're giving away that money, adopt us.
Right. Exactly. So let's not worry about the gift tax. We can talk about it later. But what I see that works a lot is the parents are maybe looking to diversify their portfolios a little bit. Yep. Adult kids are renting. So what they will do is they will typically co-sign with the adult children, and so they'll buy together. So the parents will be on the deed and they'll also be on the mortgage, and generally will contribute the down payment. But since the kids are living there, they could put as little as 5% down, so it's not huge. And then and they'll kind of work out an agreement amongst themselves. Maybe the kids need to get roommates, and it'll be their job to sort of make the payments. Sometimes the parents will help out with the payments, but then once the kids are outgrown the home, maybe they're married, starting a family, what have you, then they can decide what they want to do, sell the house. Typically the parents would get back their investment and maybe some portion of the equity. So then the parents have gained, and then also the kids have gained. They've also have whatever they pay down their mortgage, and typically some percentage of the appreciation. And they've been able to live in their own home instead of rent, and then getting the mortgage paid for partially by roommates. So.
And you have had that
multiple times.
Okay.
Oh yeah.
Aside from the financial part, is there ever a hesitation on the part of the parents if they really wonder about the financial responsibility level of their kids? Do they really want to co-sign, or is that really, when you see it, that's been resolved? I have not seen
that. What I have seen most of the time is the adult children are typically in the nonprofit world, either teachers or working for other nonprofits. They're successful professionals, but they just don't make a lot of money. Yeah. So the parents really feel like they want to help give them a leg up, and so they're not, just stuck in a small rental for potentially ever.
Potentially forever.
And it also benefits the parents. And they'll have to talk about what happens if there's major repairs, or when there's major repairs, and also if there's vacancies, if the parents want to help out. But they'll be more willing to help out with the payments when they also own the property. They're not just co-signing; they're really called non-occupant co-borrowers.
I was about to use that.
Yeah.
Which sort of raises the next thing. You mentioned that the kids may be in nonprofit, like teaching or something. Yeah. And the parents, presumably, if they're co-signing, they're making more money. Yeah. Who's getting the tax deduction on the mortgage interest?
I think it can be either, because they're all on the mortgage. Mm-hmm. So and that's something they can talk about with their own taxes, but it really should be whoever wants. I've seen people's taxes when this has been happening, and I've seen it both ways. Sometimes the parents are claiming it, sometimes the adult kids. So.
Okay, so by the parents co-signing, it takes away some of the interest rate bite, okay, in a way, and so that the kids can buy a more expensive home, right?
Right.
Let's talk about the down payment piece of this, because young people starting out, in addition to being hammered by the interest rates, don't often have a lot of cash.
That's usually the biggest problem, yeah.
Okay.
Yeah.
At the risk of having you make a face at me like you did a few minutes ago, is any of the money for the down payment coming from the grandparents?
It often is. Sometimes, yeah.
Okay. And do you know where the grandparents are getting it offhand?
No, I mean, usually investments. Sometimes, I think it would be smart if the grandparents have IRAs and they have required minimum distributions that they don't really need. Then that's an easy gift.
Okay. So another source that we discussed off camera, and I've been hearing this a lot just in the past week, but clearly I don't think you would recommend it, is if a senior got a reverse mortgage and pulled cash out of their property, because typically properties have appreciated significantly in the past few years, and not to pull out all of the grandparents' equity, but just a chunk to contribute towards the grandkids starting out on a more responsible level. Mm-hmm. But you would say on a reverse mortgage, no way, Jose.
I mean, what I was thinking was a much larger amount, in six figures, and I think that's, I think that could put the grandparents in jeopardy. If they have to do that, that means they don't have a lot of other resources, and it's mostly the house. And so what if they need, assisted living, like that could. I think that could backfire on them. But if it's something like we said, maybe if it's a $500,000 home that they're in, and they maybe give $40,000 or $50,000, that could be more reasonable.
Okay.
I just wouldn't want to see someone take out too much equity. I get that people want to let their heirs enjoy their inheritance while they're living, but you also don't want to put yourself in a bad spot.
Are you running into what I'll call maybe a psychological resistance, where young people starting out, and maybe particularly the husband half of the couple, through pride, is saying, no, I want to do this myself.
Oh, totally. Oh, yeah.
Okay.
Oh, yeah.
Yeah, and similarly on a parent or grandparent level, well, I did it myself, why can't they?
Yeah.
Okay, so you're seeing that.
Yes.
Okay. But at the point where they're doing a mortgage with you, they're overcoming those
They've already
factors.
decided, right? They've already
decided.
decided as a family, this is what we want to do. I do see when it's a co-signing situation, it's usually with a single person.
Oh, okay.
It doesn't have to be, but that's in my experience. I've seen it more when the parents are just dealing with their adult child and not a significant other with them. Gifts are different. I've seen lots of gifts with couples, parents giving gifts to couples.
Now, so since you're on the lender side, how about what I'll call a non-gift gift?
Okay.
Where one family, let's say the parents or grandparents, are quote unquote gifting it, so there's no note. Because if there's a note, they need to disclose it.
Right.
And you need to count that as a lender.
It would be a debt, just like if you had another mortgage. It's a, yeah.
Okay. But if there is an informal agreement like, hey kids, down the road, we expect you to pay us back.
Like when you sell the property or something.
Yeah.
I don't need to know about that.
Okay. And that happens all the time.
I presume it does, but after the loan's done, whatever it's their business, it's their family business, and as long as the parents are not expecting like payments, that they're not, this isn't like a loan that has to be paid back. If it's kind of assumed that once the property's sold, whatever money they put in would be returned, I mean, that's really not any of my business.
Okay. And for what it's worth, I think realtors view that the same way, that whatever the family dynamic is, the grandparents, the parents, the young people starting out, they work it out however they work it out.
And I think a lot of times it truly is a gift, no strings attached.
Really?
But sometimes it's not. I mean,
Okay.
I don't really know. If they tell me it's a gift, it's a gift.
If they tell me it's a gift, it's a gift. So we're talking about young people starting out. Are you running into this with second or third time home buyers too, who are maybe being hammered by the economy, or by the time it's the second or third house, they're doing it on their own?
Typically, when I see it that not happen is during divorces.
Mm-hmm.
Yeah, divorce situations is where people kind of end up having to start over and often don't really have any money left to purchase another home.
So actually, speaking of the divorce situation, have you run into the money is gifted to purchase the house,
Okay.
but the marriage doesn't make it? There's probably not a formalized agreement beforehand that both halves of the splitting up couple are going to reimburse the gifting party equally? Is that the best way of saying it?
Well, I mean, there shouldn't be any reimbursement because it's a gift.
Because it's a gift.
But I have seen it happen where, as far as there was a couple and one part of the couple didn't contribute anything financially towards the down payment or closing costs, and the other one did, and it was a gift. So they were able to, at closing, have the deed be in such a way that it basically said that the one who received the gift, that they had a certain amount of equity in the property to kind of protect that party.
Okay. So not exactly on point, but are you seeing situations where, let's say, you've got the house and there are kids and the marriage is not working out, that maybe, for example, the wife stays on in the house with the kids until you know where I'm going with this.
Oh, yeah.
Okay, until the kids, graduate from high school or whatever, and then the house is sold, but in the interim, both parties are contributing to the payment, or is it usually the husband who makes the payment on the house?
I've seen it both. I've seen it every way.
Okay.
But yeah, it's part of the problem is until there's legal documentation, it can be really hard for the person leaving the house to, because if they're on the mortgage, then they have that payment, and they're typically going to have to qualify carrying that payment until they have legal documentation stating that the person staying in the house, let's just say the wife to make it simple, that she is fully responsible for mortgage, any homeowner association dues, maintenance, everything. Until then, he's on the hook for that.
Yeah.
So it can be a tough, year or two, whether waiting to get everything sorted out, because, I mean, unless he's able to qualify to carry that payment, the new payment, any support, any, you know, car loans, whatever kind of other bills you have.
Yeah. So another interesting thing on that scenario, if they've been in the house a few years, chances are the interest rate that they've got.
I've already been running into that, yeah.
Oh, yes. That interest rate is substantially lower than the current market rate. So there's going to be reluctance,
Yes.
if not outright refusal,
Yes.
to sell that house and to get rid of that mortgage.
Correct.
Yeah.
Or to to do any of that.
Or even
yeah.
to refinance it.
Yep.
Yeah. A few years ago, they would have refinanced out of it.
Yeah, no problem. Yeah.
That's right. But you're not going to refinance out of a 3% into a 7 or 8%.
No.
No. Yes. Okay.
So
It's a different world.
it's a different world. So things are gonna get a little stickier and stickier with that. So.
Okay. One of the narratives in what I'll call YouTube land,
Okay.
but I'm not seeing it, and I bet you're not seeing it either, is foreclosures and delinquencies. I mean, there's some people who are saying this is going to be like 2008 or 2009 all over again. I'm not seeing that.
No, I don't know. I mean, I'm not sure what people are going to be delinquent on or
Yeah.
foreclosing on. I mean, most people have the low rates.
Correct.
So their mortgage is probably cheaper than anything they could rent. And most people have a good amount of equity. So if they do lose their job, some kind of bad financial situation happens, most of the time they can sell and, you know, instead of just letting it go to foreclosure and they lose everything. So
Yeah.
I'm not seeing any of that.
So another thing I wanted to ask you about, I learned this term this morning for the first time. It's called a layaway home.
Oh.
Yes, so that when the kids are really young, we're not talking about like a getting married situation, the parents, in anticipation of the fact that the kids will grow up and it's going to be a more expensive world and they're not going to be able to qualify for a home. In anticipation of all that, maybe a decade early, the parents will buy an investment property and put a tenant in it. And particularly like in the Washington metro area where there would be a high likelihood at some point at the conclusion of education, people would actually settle here, right? So there would be a rental property, and then some years down the road, the child or couple can move into it, and the adults can simply gift them that house and gift them the equity. But I take it you're not seeing investors who are doing that quite yet.
I mean, if they are, they haven't told me that was their end goal.
And I would imagine that with the increase in rates over the past year, have you seen any investor loans recently?
Oh yeah, I have.
Oh really? Okay.
I have, yeah. So actually, I mean, a relatively good number. Yeah, because there's still some people are finding deals to be had. I also had quite a few people doing the 1031 exchanges where
Yes.
they're selling an investment property, need to buy another one or two to avoid the capital gains. So I'm having those. And those are usually relatively small loan amounts, so the rates aren't that prohibitive. You know, when it's $200,000 versus like a $700,000 loan, it's not quite as bad. And we also have some loans where you know, we can just basically it's almost like a commercial loan. It's a DSCR.
I was about to ask you.
We have multiple ones of those where you can buy the property and you'll get approved as long as you have some cash in reserve, and the potential rent is enough to cover the payment.
Now, can you explain to the audience what a DSCR stands for?
Debt service recovery ratio.
Okay. So that if the rents on the property cover the debt service, you approve the deal.
Yeah. And again, they have to have good credit. There's down payment.
Yeah.
You put 25% down-ish. And you'd have some cash reserves. You know, you can't spend all your money on the house. You've got to have some reserves. But
is it fair to say that in that scenario, though, it is the property that's being bought
absolutely
that is qualifying?
Yes.
Yes.
Yeah, 90% of it. Yeah.
Okay.
Yep.
So when you say there are deals to be had, if the buyer finds those deals, because they have a great realtor, if the buyer finds those deals, and if the cash flow on the property covers the debt service even at the higher rates, it's a go.
It's a go.
Okay.
Yeah.
Main Street Home Loans as a company, do you cover other states like DC and Maryland?
Oh, we sure do. So I'm licensed in Virginia, DC, Maryland, and Delaware. But as a company, we are all up and down, mostly the East Coast. So from Rhode Island to Florida. And then my parent company, NFM Lending, we are licensed in most of the U.S.
Okay.
So there's a few states. No Alaska, no Hawaii. There's a few states we don't lend in, but.
But if somebody takes a vacation in the wintertime down to Florida and they find a place they want to buy, you can do that loan.
I can have a colleague do it. I'm not licensed in Florida.
Okay.
So, yep, Delaware is my kind of out-of-region license. But it would be someone in my office who I've worked with for a long time, and they would refer me their Delaware buyers. So.
Another subject I wanted to ask while we still have time.
Yeah.
Have you come across what I'll call a bridal registry contribution program?
Yes.
You know where I'm going
I know
with
what
this.
you mean with, right, and
Okay.
I haven't originated one of those in probably 15 years, but
yeah,
it's been around for a long time, yeah.
Yeah, and so basically the concept, if you're watching out there, is that instead of somebody receiving an extra set of dishes as a gift or a blender as a gift, they would receive cash for a down payment or closing costs as a gift.
Yes.
Okay. And assuming that it's documented and all that, you can use those funds towards a down payment or closing costs or whatever. But even though it's out there, you're not seeing it.
No, not really. I mean, generally what happens is, the truth of the matter is we only need generally 1 to 2 months bank statements. So once the couple has received all of the cash and deposited into their bank account, most of the time they're not immediately buying something. There's going to take some time to look, and they have their honeymoon or whatever they're doing. So once that money is in there and it's been in there for a couple of months, we don't even ask about it. So it's sort of a lot of rigmarole that often isn't necessary.
We've been talking a lot about people who are struggling to buy, but in the Washington area, we have so many people who are not struggling, who are basically loaded. Yeah, they've got strong income, strong assets. And what I've run into recently are people who are using, I guess you'd say, cash management accounts through large multinational investment entities, banks, or I don't want to use any particular term on camera, but if somebody has, let's say, $10 million in one particular financial institution, they can get a below market interest rate, like 1% below market.
Yeah, well, a lot of times they'll just take a margin loan against their investments too. So, yeah.
Oh, okay. And have you come across that?
I've come across quite a few. I've recommended people take margin loans.
Oh, okay.
Yeah. Especially when they have another property to sell, because they know that they'll be replenishing that account. You don't want to keep your funds on margin for forever. But it's a good stopgap, and it works out really nicely. Then they're not taking a lot of money out of the market. They're not paying all the capital gains. They're just borrowing their own money.
Yeah.
And then they pay it back when they have either that big bonus coming in, or if they've sold another property is usually when that's recommended.
And that's really an entire other side of, I think, the market that hurts first-time home buyers. And
deep pockets.
yes, that many of the people in our area who are buying what you'd call starter homes are not people who are going to live in starter homes. They're people who are going to rent out starter homes.
Correct.
Yeah.
Yeah.
So that if you're looking to buy one to live in, there's a good chance you're going to be competing against an
cash investors and
Yeah. In that regard, do you come across buyers who are using, I guess you'd call, government programs that either buy down the rate or pay for closing costs, or?
Yes, I have been. So in Virginia, we have the Virginia Housing Development Authority, and they have some grant money for first-time buyers, and there's income limits and things, but it's a great program. And they have some other programs to help if you don't qualify for the grant with down payment assistance. So I mean, I'm not originating as many of those as I would in kind of more normal times.
Yes.
But they're still, like, those can be still closed in a month, you know, a good, reasonable closing time. So those are around, and I did just close a loan in Maryland, in the Maryland mortgage program, where they bought in Montgomery County. Their agent negotiated a little bit of closing cost assistance, but they put 3% down. They got almost $40,000 of their student loans covered. It was an amazing loan. Yeah.
So
and that was just last month.
And Maryland covered $40,000 in
Yes,
student loans.
Student loans, and there was also some closing cost assistance. I think it was, if I remember, maybe 5% of the loan amount. So, and that was that one. The down payment assistance was it's an interest-free loan that gets paid when you refinance or sell, and then there's a separate loan for the student loans, and that one is. It's not really it's not like another mortgage, but it's another loan, and that gets recovered, like it's, you know, gets forgiven 20% a year. So after 5 years, gone. Yeah.
So that people who are watching should not be necessarily overly intimidated by the fact that they're beginning, that there is government assistance for them.
Oh, for sure.
In different states. And from the sound of what you're saying, the processing time is far less than what it would be for an assumption.
Oh, I think so. Oh, yeah. Oh, yeah.
Yeah.
Oh, yeah.
Okay. I want to thank you for being here and shedding light on the complexities of the current marketplace.
Well, thank you for having me, Andy. Yeah.
Delighted. And so remember, you can reach Carolyn at the number here, and if you're watching this on YouTube, her information will be on the number below. Thank you, everyone, and we'll see you next week.
Thanks, Andy. I think that went really well.